Good morning, everyone. George DeSantis here with the short version of the look at the market. As we all know, yesterday was a pretty bad day at BlackRock, as my brother Bob would say. Um, Market dropped significantly. I was not around. Some of us were participating in the very sad ceremony of a funeral for my friend Steve. So last night I took a look at it and I have some ideas I'd like to share with you for what it's worth. But before we do that, we usually have to do this. We bring up a disclaimer and ask you to take a look. It's not a, this video is not intended to give any particular person specific advice on what to buy or sell at any particular time. It's general educational purposes. Okay, that's what the video is about. So we'll start off by looking at some charts on the indices, just the index, the S&P, perhaps the NASDAQ too. So let's begin with the weekly chart of the S&P as usual. So here's a weekly chart of the S&P 500. This is the one that we usually look at. Um, First thing we would do is take a look at the moving averages. The 4 is above the 9 exponential moving average, and that is above the 30 weighted moving average, and this is the 50-day moving average, 50 a week in this case, moving average. So as far as moving averages are concerned on the weekly chart, we still have an uptrend, and the parabolic is still below the most recent bar. So in spite of all the pain yesterday, the chart is still telling us that we are still in an uptrend. We do have a bearish bar here. Now recall that on last weekend I mentioned that this bar here was touching the 2 standard deviation Bollinger Band, that dotted green line, and that we would likely have a pullback. That's the terminology I use. Of course, no one can tell how large a pullback it would be. It was pretty big. It was like, what, 5% or something like that yesterday on many of these indices. So with that in mind, let's take a look and see where we are now and where we might go within the next couple of weeks or so, next week or two. This bar here that we are experiencing this week, it's not quite a bullish engulfing candle because this body is not quite within this body, but that's that's something that we should keep an eye on. We do have somewhat of a shooting star. You know, this shadow here is way up above the body. It's not quite twice the size of the body, so it doesn't quite meet the criteria of a shooting star, which is bearish. So if we go to look at some of the other indicators now, MACD, I'm using the 1939.9 here because this is the one that we will look at, according to Jerry Appel, gives us more accurate sell signals. So this is the one we look at for a sell signal on the weekly chart anyway. Notice it gave us a sell signal right here. That was at the beginning of this downtrend here in February, March, okay? We don't quite have that yet. We hope we don't. As far as Williams percent R is concerned, notice that since it became bullish here, crossed above that magenta line, we have had a nice uptrend. And we are still above it, although it's trending down, of course, a bit today. Now, the sum of the rate of change indicator is still above that 4% line. So that's still confirming that we are still in an uptrend in spite of the pullback yesterday. Force index is more useful on the daily chart. So all in all, the answer to the question how far we go, we don't know yet, but I'll show you some things on the daily chart, gives us some idea. And then we look at Jake Bernstein's chart too. So we still have a bullish trend in spite of everything. Hard to believe. So let's take a look at the daily chart. Okay, on the daily chart, you can see that the 4 EMA is certainly trending down and now kissing the top of the EMA. So if it crosses below, we would have to say that this is one of the sell signals that I like to use, and we have to be a hell of a lot more cautious if that happens. What else are we seeing? Well, certainly parabolic turn bearish here yesterday. And today so far, it is bearish. It's above the most recent bars, these last two bars. So it's bearish in that sense. We're getting mixed signals though. For example, my friend Rick Monteith, from whom I learned this 930 approach, he points out that when when the 9 EMA, this red line, crosses above the green line, the 30 weighted moving average, um, the first close between the 9 and the 30 is a very good buy signal. In other words, it's a buy zone created here. So we saw that and we got a nice move. Now we're in that buy zone again. And we're not sure how far down we're going to go, but if we hold above the 30 weighted moving average, that would be a good indication that perhaps we find some support here, and we might have a 7 or 8% pullback, but not quite 10. The numbers, are variable anyway. So we'll see how far down we go from here. But we're looking to see if price would hold above this 30 weighted moving average, because this remains, this area here between the 9 and the 30 would remain a buy zone. Okay, so we want to see now, does that hold? Now, as far as MACD histogram is concerned, you can see we awfully close now to a sell signal on MACD. So if we go below the zero line and we get a red bar, that would be a sell signal that we ought to pay attention to. And if you haven't lightened up on positions yet, as Jim Cramer says, this may be a time to keep an eye on the MACD, the 1939.9, to decide whether you want to do some selling or do some covering, some selling of call, whatever defensive moves you want to make, okay? So we're at a tricky point here, or we might even say a treacherous point. The other indicators are fast approaching, sell signals as well, like the Williams percentile is fast approaching the magenta line, the -50 line. And the sum of the rate of change indicator is just sitting above the 4% line. Now, force index, this force index with a 2 period, it's spiked down, and typically we'll get a trend up once that spike down occurs, that big spike down. So the force index is telling us to hang on. We might see some support here at the 30 weighted moving average, but we got to keep a very close eye on that, because we might just break down further, and who knows how far down we'll go. All right, let's take a look at the Nasdaq. Well, before we do, let me bring up Jake Bernstein's chart. Here's one of Jake Bernstein's charts, and I'm showing the weekly chart here. What he plots is that a 10-day moving average, a 10-period in this case, 10-period moving average of the highs and an 8-period moving average of the lows. So you have the highs and the lows, and as long as you have these bars above these both moving averages, he usually considers this a continuation of the uptrend. The weekly chart is not as instructive as the daily, so we'll turn to the daily chart. When we look at the daily chart, here's what he looks for. He looks for two complete bars below the 8-period moving average of the lows. Right now we don't have any complete bars. This is not quite a complete bar, and this one was of course just a breach of it. So we don't yet have on one of Jake Bernstein's charts, we don't quite have a sell signal here. I just wanted to point that out, although many of the other indicators are looking weaker than they were, of course. All right, here's a weekly chart of the ETF of the Nasdaq, the Qs as we call them, QQQ. Not a good looking chart at all by any means. It's a weekly chart. We hit the 2 standard deviation line here, as I pointed out on the weekend, last weekend, and we said we would expect a pullback. Well, I'm not sure that we looked at the NASDAQ, but I looked at it. I'm not sure I shared it with you. But we saw the same thing on the S&P. So we expected a pullback here. We got it. We're having it, we should say. And this is a bearish engulfing candle, so that's not good. That's a bearish engulfing candle. Parabolic is still below the most recent bar, and this is weekly now. Then 4 is above the 9, 9 above 30. So insofar as the moving averages are concerned, on the weekly chart, we still have an uptrend. That's, of course, very different on the daily chart. So on looking at the other indicators, they confirm that we still have an uptrend. But let's look at the daily chart. On the daily chart, we have a different picture, of course, shorter term. So the daily chart was riding this 2 standard deviation line for a while, and that got to be a little too much. Then we had a hanging man here on Thursday, on what would this be? Today is Friday, so this was Wednesday. Wednesday we had this bearish hanging man. It looks like a hammer, but when it's at the top of a trend like this, it's called a bearish hanging man. And then yesterday, of course, this is what we got. What we have so far today is a bearish bar again. And we are seeing that the 4 is now looking to cross below the 9. So if you can't sleep at night and you want to take something off and you haven't done so yet, hey, be my guest. I haven't sold anything. I'm taking some protection with some options, but I haven't really sold anything yet. In fact, I haven't looked at the charts yet today. I am still wondering if we wouldn't find support here at the 30 weighted moving average. I'm waiting to see if we do. If we don't, then I have to take more action to protect my gains. I have huge gains. Now, if we look at the MACD, the 1939.9, that's the one we take sell signals on. We don't quite have a sell signal yet, and this is on the daily chart. We don't quite have a sell signal. It's pretty close to it's just a little above the zero line. If it goes below and turns red, it will give us a sell signal. So we can keep an eye on that. On the weekend, we should know more at the end of today's trading. So Williams percent R is still above that magenta line. That could change very quickly. And the same thing is true of the sum of the rate of change. Force index spiked down, and we usually get a hold when that happens. We usually get a move back up. If we look back here, you could see some of the spikes. On this spike here, this was a low. We had a low here, and we got an uptrend from there. If we go back even further, you could see some of the spikes down. This one here gave us another low, and we had a nice uptrend from there. So on the NASDAQ, just like with the S&P, we're seeing similar things. So the bottom line is markets changing personality here, as the shaking people would say. We've got to see this thing close above the 30 weighted moving average on the NASDAQ and the S&P to feel a little more comfortable about any kind of support here. Otherwise, we got to really start thinking of, taking whatever gains you might still have. Listen, have a good day. I hope the market turns around by the end of the day. We'll see what happens. And we'll do this on the weekend.